Welcome to Markets Today. I'm Lata Venkatesh. With me is Ekta Batra. Well, the markets went into the credit policy not expecting a rate cut. They didn't get a rate cut, but a little bit of disappointment had to be shown on the bank Nifty, especially on the PSU Bank Index. But quite clearly, what took the toll on the markets was the extent to which bad loans went up in a big bank like Punjab National Bank. Markets had two burdens to bear today, but to be fair, in spite of that, it was not a very bad day.
Yes, Lata. Well, if you leave out the volatility that came in from PNB's numbers and what it caused for the markets, I would think that it was resilient in terms of the other numbers. ACC, however, was down around 1% post numbers. Lupin also disappointed a little bit on the top line. All that and more in the next 30 minutes. These are top stories. Markets fall for the third consecutive session, with the Nifty recovering from the day's low but closing just a shade above 8750 today. Sentiment was dampened with the RBI status quo policy and weak earnings.
The Reserve Bank leaves key rates unchanged but cuts SLR by 50 basis points to 21.5. Governor Rajan says there has been no substantial new developments on disinflation or on the fiscal outlook since January 15, hence no action.
And Punjab National Bank is the biggest Nifty loser today after reporting very weak quarterly numbers. NII is flat with profit growth of just 2.5% on a low base. Asset quality worsens. Management says expect pain on asset quality to continue for another 2 quarters.
Well, those are some of the headlines from the market, and here are the experts that we have lined up on the show for you today. Gautam Trivedi of Religare Capital Markets, that is, will tell us how he is reading the current market setup. And we have a whole host of experts, bankers like Arundhati Bhattacharya of SBI and Shilpa Kumar of ICICI Bank, as also an economist, Taimur Beg and others, to react to the Reserve Bank's credit policy.
Okay, well, the RBI's cautious stance and poor earnings rocked stocks on the Lal Street. On the downside, you'd have to say it was the Bank Nifty which was the key culprit in terms of dragging the frontline indices. It was the Bank Nifty which was down 2.4%, close to 500-point cut, and the Sensex and the Nifty and the mid-cap index, all three of the indices closed in the red in today's trading session. Anuj joins in to wrap up all of the day's trade for us. Anuj, volatility is keeping the bulls at bay, it seems.
Well, clearly there is a bit of volatility at higher levels, close to the all-time highs. The market has slipped a bit. Today, of course, the bigger news actually was not the policy. It's a big statement, but the bigger news was the earnings miss. That was really the key reason why the market went down so much today, led by PNB. That was the truly ugly number in today's trade. But even other numbers, because the kind of rally that we have seen in some of these stocks, Marico, Lupin, TVS Motor, the fact that they just barely managed to meet expectation led to a big decline in some of these stock prices intraday, and that told you that the market is in no mood to accept any kind of disappointment as far as earnings are concerned. The Bank Nifty was down 3% today and has lost now 8% from the highs, raising fears that is the leadership of the Bank Nifty over. At least the numbers are saying that it better be over, because clearly the numbers are not matching up to the kind of rally that we have seen. Let's talk about some of these banks. In fact, PNB, of course, was right on top. That, as I said, was an ugly set of numbers. Stock was down 8%. Axis was down 5%. That's the one which normally goes into policy with the highest expectations. Kotak was down about 3.5%. Some other financial stocks which were down included HDFC, HDFC Bank, and State Bank of India. Apart from that, auto stocks were lower too in trade today. Stocks like Bajaj, Mahindra & Mahindra, and Maruti, all of them were down between 2 to 3% in trade today. On the gaining side, the obvious gainer was Cain India. Crude has rallied 10% in a matter of 3 days, and that's clearly playing out right now, up 4%. Commodities in general doing well globally. Sesa Sterlite was up 6%, and Reliance was up about 3% or so. And some other prominent Nifty winners included Bharti ahead of its numbers. Tata Motors was up 2%, and some defensive buying in ITC. Finally, in the mid-cap space, it underperformed. There was a mix of winners and losers in today's trade. Videocon was up 9%, Future Retail was up 8%, and JSW Energy was down 9%. So the big question now is that with the banks having given up the leadership role, which sector is going to take market back towards all-time highs? That's something that we'll be watching out for as we move forward.
I take your point, Anuj. The banks really have now nothing more to look forward to. The rate cut was a hope that kept the Bank Nifty high because that would mean higher bond prices and higher returns on their bond investments. Now, in all probability, the governor may not cut rates up until April 7th, which is the next policy, which means this quarter practically is over in terms of bond gains. There is nothing more to write in terms of EPS or other income earnings. As well, this quarter is quite clearly a washout in terms of NPLs. The Punjab National Bank NPL, gross NPL touching 6% is a bit of a shocker. So I don't see anything in the horizon that can help banks once again regain their leadership. But the entire market has still lost only about 0.4. It's not even a 0.5% cut for the Sensex and the Nifty. So my bet is that with a little bit of positive news coming from global markets, it's quite possible maybe oil receding once again and maybe some pre-budget leaks. This market has still not lost sight of 9,000. It may not be entirely led by banks, but I think the markets on the whole have not lost. It's only the Bank Nifty that has lost out something.
Yes, absolutely. And Lata, on your point on banks, I would like to point out that PNB and Bank of Baroda on a YTD basis, if you look at it at current reckoning, both of those stocks are the top losers on the Nifty. Bank of Baroda down close to 15%, Punjab National Bank down close to 20% on a YTD basis, and no other stock has lost double digits except for the both of them. But time now for some market perspective then. Gautam Trivedi of Religare Capital Markets says that foreign flows are strong currently, but investors have big expectations from the budget.
The fact is, a lot of what we're seeing in the market is driven by foreign flows. So if you look at the numbers year to date, literally within the last just over 4.5 weeks, FIs have put in a total of $2.9 billion into the market. A lot of people, especially foreign investors that we speak to, have asked the question that will the government tolerate a higher fiscal deficit and continue with their planned expenditure, or will they work harder to cut costs and bring down the deficit? I think the big event coming up in the next 4 weeks is the budget. And I would say not just the budget, even the railway budget, because a lot of people and a lot of expectations are high on Mr. Prabhu to deliver something that will be different from what we've seen over the last 4 years in the railway budget. So I think both these budgets are going to be imperative and important from a both domestic and FI perspective. But I think from a foreign overall interest perspective in India, it remains strong. In fact, it's even growing.
All right, so that's where the interest might come from for the budget. Now let's look at all the action from the FNO space. Go across to Nigel D'Souza.
Well, the Nifty ended lower by close to around 40 points. So selling the Nifty is making a good amount of money. Looking at the options data as well, it's looking at, in fact, call writers, they are making money on a day-to-day basis. The 9,400 call, that's way off the current mark. So that one, in fact, is being written. The 9,000 call as well did see the premium fall from around 105 bucks to 75 rupees approximately. While the big worry is that the 8,800 call now, that's the near-term resistance because fresh writing was seen at that particular strike with the premium falling from around 200 bucks closer towards 160 rupees. There is some support though that is seen at around that 8,500 put because that's where fresh writing is seen at that particular put level. The Nifty was down by close to around 40 points, but the premium on that particular strike moved absolutely nowhere. Few stocks that were in focus today, the likes of Cesar, Sterlite, the stock that has been getting sold into, that one came in for a short covering bounce. Kane India as well did come in for a big short covering bounce in trade today, but the reason that the Nifty didn't fall apart is because big boy, Reliance Industries, that one did come in for a short covering bounce, and that's what held one end up because the PSU banking stocks, they were getting clobbered. PNB posted numbers, that stock saw big shorting today, while SBI as well followed suit. That stock as well was lower, big massive volumes, fresh shorts been seen on that counter as well. From the broader markets, JSW Energy did come in for some fresh shorting pressure, while in fact PFC as well did see fresh selling in today's trade. One stock that stood out when the Nifty was quite wobbly as well was Arvind. Now from the broader markets, that one continues to see buying interest, big open interest build up as well on that counter.
Okay, Nigel, thanks very much for that. But the big event for today had to be the RBI credit policy. Lata, no surprises? Was it expected?
Well, a small percentage of the market was expecting a cut, but more importantly, there was a little bit of hawkishness. According to me, in the Jan 15 policy, the governor said by January 2016, inflation will fall below 6%. Today he said it will be at 6%. And he wants the difference between CPI and the policy rate to be 1.5 to 2 percentage points. Now, even assuming it's 1.5, 6% plus 1.5 is 7.5. Repo rate doesn't go below 7.5. We are at 7.75. So there isn't a whole lot of cuts that is to be expected unless you're very confident, more confident than the governor that inflation will fall below 6%. But there were a lot of takeaways on non-policy matters, or non-monetary policy matters. For one, he's quite clearly worried about the strengthening rupee. He has tried to smother that by allowing Indians like you and me to spend $250,000 a year out. The limit used to be $200,000. As well, when you know that last year the bulk of the foreign money came in debt, 26 billion. Only 16 billion came in equity. He has said that you can buy corporate bonds, that is debt in India, but they must have a minimum residual maturity of 3 years. Most of the debt is coming, money is coming into 6-month debt. That will not come. So the flow of debt also, flow of dollars gets a little slower, which means exporters have a better chance. The rupee will depreciate probably towards 62, 63 as we get to April, May, and that will be good for exporters, good for the economy in general. He has also tried to enable banks to fight with their bad borrowers better. What he's saying is that you don't have to mark a loan as NPL. If you have changed the management of that company, I will give you 2 more years to allow the management to rework the company. This is almost telling bankers, if you change the management of a bad company, I will not mark it as NPL. Now, that's a very, very proactive step to take to ensure that borrowers don't take bankers for a ride. As well, he has allowed banks to convert loans into equity at lower than the market price. Until now, a SEBI formula worked. Now there is a waiver of price. You can convert it at a very low price. That again allows a bank to own the company to which it has lent, and then it can rerun the company, probably change the management. So there are so many things to stabilize the economy and improve the economy. These won't work in a day. They won't work in a quarter, maybe not even in a year. But these are very good long-term steps that the credit policy has brought.
So overall, was it a thumbs up?
Oh, I would give it a 10 on 10.
Okay, so that's the word coming in from Lata on the policy. On that note, let's listen in to the governor himself.
We are looking for developments on both the disinflationary process. We would like to see it continue. And of course, on the fiscal front, we have a budget coming up. So those are important developments that we will pay attention to. I've said before that we think that between 1.5 to 2% is a reasonable real rate given where we are in the business cycle. We do not intervene to try and target a particular level for the exchange rate. Where we do intervene is to reduce volatility, and we have intervened in both directions in recent months and weeks. So we both buy and we sell. So it is not in any way an attempt to go one directional. I think we're perfectly comfortable with where the rupee is, but it is a risk that we have to keep in mind going forward with the massive amounts of quantitative easing that are going on in the rest of the world, that there are possible dangers of us becoming uncompetitive on that dimension.
There was that currency worries of the Reserve Bank showing through. Well, here are some of the top bankers we spoke to today and economists, and they told us what they made of the credit policy. Listen.
Policy is quite neutral, but I think on expected lines, I don't really think the market was thinking that there would be another rate cut so soon. And whether we cut our rates, I think the governor has very clearly said that, it takes time for these things to work itself into the entire industry. Also, if you have read the Urjit Patel committee, they have said, that there is asymmetrical transmission whenever there is excess liquidity. And not excess maybe, but whenever there is adequate or more liquidity. And I think that is what is happening at this point of time.
I think you have to put the policy in the context of what's happening overall. I think if you look at the last 1 year, the way India has moved on significant macroeconomic factors has actually kind of put it at the top of the emerging markets pile in terms of macroeconomic traction that the economy has gained. Rate cut expectations do stand. We would still expect another 0.25% going into the end of this quarter. And I think, therefore, for the year, you will find bond prices supported and heading in the direction of 7.5.
If it's looking at 4-5% inflation, there is no way for the repo rate to come down below 7. So I think that, looking at another 75 basis points of rate cut in this cycle is good enough. I know that there are others who think that, global deflation is the big trade ahead and we will see major rate cuts all over the world. I don't think India's inflation dynamic will necessarily follow the global trend in that direction. I think inflation stabilizes around 4-5%. That means 7% repo. That means another 75 basis points of rate cut in this cycle.
All right, another 75 basis. I would perhaps give it only 50 basis. Let's see. Time for a break now, but coming up, all the action from the earnings calendar. Stay tuned. We'll also get you some trading strategies.